New trends are emerging in the US housing market that you should be aware of. So, for example, home prices are still rising, which is highly unusual during this time of year, and pending home sales, a measure of future closed home sales, just posted the biggest year-over-year gain in more than 3 years. But will this be short-lived given the rapid rise in mortgage rates that we have been seeing as of late? Let's discuss based on this latest report from Redfin. And of course, there's a lot to share in today's video. Let's begin. Let's first talk about rates, then we'll talk about home sales and home prices and much, much more. Also, I'll share how the trends we're seeing today, how that compares to other areas amongst the 50 biggest US cities, some very big differences. So mortgage rates for an average 30-year fix, according to them, rose to 7% for the first time since early July this week, erasing their late summer decline in the low 6% range. So back in early and mid-September, average 30-year fixed rates, according to Freddie Mac, and of course, according to the Mortgage News Daily, decreased to the low sixes. Now we're in the upper sixes to low 7% range right now. So these rising rates combined with economic uncertainty and anxiety brought about the impending presidential election. Hope you guys voted yesterday, which is today on Tuesday, are causing some prospective home buyers and sellers to press the pause button, but the effect is smaller than expected. On the buying side, pending home sales increased by 4.5% year over year during the 4 weeks ended October 27th, the biggest increase on a year over year basis in more than 3 years. Something that they actually talked about here in the next paragraph, which I applaud them for doing that, is comparing trends we're seeing today over the past 1 year, is that back 1 year ago, we're looking at rates very close to 8%, rates increasing by about 1 percentage point to about 8%. Now, rates have been increasing as well, but we're still below the threshold we saw 1 year ago. On the selling side, though, new listings, a measure of people listing their house for sale, that rose by 3.4%, in line with the increases we've been seeing over the last several months. So this is basically telling us that pending home sales are increasing faster than new supply hitting the market. Contracts being signed rose by 4.5%, whereas new supply hitting the market, a measure of people listing a house for sale, only increased by 3.4%. Now it says here, but these numbers do not tell the whole full story. First, they measure a 4-week period ending just before mortgage rates hit 7%. And some people may see 7% as the threshold whether to buy or sell a house. So let's have a look at that, looking at the Mortgage News Daily, because according to them, as of Friday, October 25th, the average 30-year fixed rate on a national level was at 6.90%. And again, this summary or this report from Redfin only covers the 4 weeks ended October 27th before rates hit 7%. Second, Redfin is comparing to a period in October of 2023 when weekly average rates hit a 2-decade high at 7.79%, dramatically slowing the housing market back then, which is this right here. According to Freddie Mac, they look at weekly rates every Thursday, I believe. So for the week ended October 26, rates hit 7.79%, a big increase compared to the 6.27% rates we saw back in mid-April last year. This obviously is much different compared to what we're seeing right now, because they're comparing a period when rates were at more or less 7.8%, looking at weekly rates, then as of October 24th at 6.54%. So rates at lower levels or much lower levels compared to the peak back in October of 2023, which is kind of skewing the year-over-year changes in this report. And finally, there are signs that house hunters are backing off at the early stages of the home buying journey. So mortgage purchase applications are down by 8% from 1 month ago. That's based on data from the MBA or the Mortgage Bankers Association. And Redfin agents report that many buyers and sellers are sitting on the sidelines until after the election. I'm posting this video one day after the election, so please leave me a comment below if you guys are waiting for the results of the election before you buy or sell a house. Or in contrast, are you guys waiting for home prices and or rates to decrease before you buy a house as well. All right, let's move on and talk about their key housing market data going back over the past 4 weeks. Again, the 4 weeks ended October 27th. They basically look at 400 plus US metros, and their data, or their weekly data, goes back to 2015. So their median sale price increased to $387,000. That's an increase of 5.5% year over year, the biggest year over year increase since February this year. That gain of on it compared to 1 year ago has been paid at around 4% for quite some time. Now we're at 5.5%. Asking prices rose by 5.9%, the biggest increase in about 2 years. All right, let's look at Redfin Data Center. Take a look at this. This is highly unusual right now. So over the past basically the past month, home prices based on the median sold price has been increasing. It's up by 5% right now. 1 month ago, it was at 4%. As you can see, basically all year, gains have been paid at around 3 to about 4%. To start the year, or I'd say back in February, we saw gains of 5%. So increasing in the range of 3 to 5%. But what's really unusual is big uptick in prices, unlike 2023, where prices saw the more seasonal decrease. Also, we saw that in 2022. But in 21, this is pretty crazy as well. Back in, I think it was April of 2021, rates were increasing to 3.4%, a giant increase from the 3% rates we saw back in early 2021. Then once we hit August, rates decreased again to lower than 3%, and that caused home prices to increase for the remainder of the year, which is highly unusual. So this is pretty crazy to see that prices are increasing at a faster clip over the past 1 month than they did in 2021. But again, this is short-lived given the rapid rise in mortgage rates as of late. In my personal opinion, I would expect to see that home prices will kind of go like this, given the rapid rise in rates if rates stay above 7%. And of course, if we continue to see more inventory compared to last year. In addition to that, we also should expect to see a seasonal decrease in prices through the winter months as well. Of course, real estate is local, right? So Redfin looks at the 50 most populous US metros. So there's only 2 metros that are down regarding their median sold price from 1 year ago. That's San Antonio down by 3.1 and Austin, Texas down by 2.7%. I can't remember the last time that Austin, Texas was not in the number 1 spot, but only 2 metros are down. This means a whopping 48 of the 50 biggest cities have posted gains on a year-over-year basis. Therefore, 96% of the 50 biggest US metros have posted gains compared to the previous year. The biggest increases are actually in Fort Lauderdale, Florida, up by 15.3%, Milwaukee, Wisconsin, up by 14.5%, Anaheim, California, up by 10%, same for Providence, Rhode Island, and Warren, Michigan saw a gain up by 9.5%. Let's also have a look at the measure of contracts being signed or pending home sales and how that compares to new listings. So pending home sales increased in 35 of the 50 biggest cities. This means that approximately 70% of those 50 biggest cities had posted gains compared to the previous year. The biggest gain was actually in San Francisco, up by 25%. Then we have Portland, Oregon, up by nearly 22%, San Jose up by 20%, Virginia Beach up by 18%, and Dallas at 17%. In contrast, Tampa, Florida saw a big decrease, down by 29.5%. I'm guessing that's more impacted by the hurricanes that hit that area about 1 month ago. West Palm Beach, Florida saw a decrease down by 17.5%. Fort Lauderdale, Florida down by 15.6%. Miami down by 14.5%, and Orlando, Florida down by 14.1%. So the top 5 markets that posted the biggest declines pending sales were all located in Florida. So that's the demand side. Let's take a look at the supply side, new listings. That actually decreased in 11 metros. In contrast, this means that 78% of the 50 biggest metros posted gains, including San Jose, California. The biggest increase of new supply hitting the market, up by 21.5%. Seattle, 18%. Washington, D.C., up by 15.9%. Anaheim, California, 15.6%, and Phoenix, Arizona, up by 15%. In contrast, Tampa, Florida, again, it makes sense that if there's a hurricane hitting your region causing a lot of destruction, you're going to see a lack of contracts being signed, but of course, a lack of people listing their house for sale. This all makes sense, down by 32.8% there. West Palm Beach, Florida, down by 13.7%. Atlanta, 12.6%. Fort Lauderdale, Florida, down by 10.3%, and Orlando down by 9.3%. For the country as a whole, there was just over 74,000 pending home sales. That was an increase of 4.5% year over year, the biggest increase in nearly 3 years, which is wrong. It should say in more than 3 years, because I actually looked at their data center. It said that this was actually the biggest increase since June of 2021. In other words, more than 3 years, not nearly 3 years. Redfin got it wrong again. Even says it above here. I can't tell you how many times I've found errors on Redfin's website. Anyways, it says right here, the biggest increase in more than 3 years, not nearly 3 years. Anyways, Redfin kind of get it right, man. Anyways, new listings, that rose by 3.4%, as I mentioned. Now here's a look at active listings. In other words, the amount of houses for sale, that was at about 1 million houses for sale, an increase up by 14.8%. But that was the smallest increase since March this year, which is one of the contributing factors why home prices are increasing, because active listings or inventory levels are actually going down, which is seasonal. But if you guys want to see home prices tank, you'd want to see inventory basically skyrocketing, right? So let's take a look at that. Let's look at pending sales first. So pending home sales rose by 4.5%. That was the biggest gain since the 4 weeks ended June 13th, 2021, when at that time, pending sales also increased by 4.5%. In regards to new listings, again, that rose by 3.4%. We are seeing a seasonal decrease like we do each and every year starting in the summer months. In regards to active listings, which is housing inventory, the amount of houses for sale, as you can see right there, over the past 1 month or so, that has been going down. Actually has been going down at a faster clip compared to 22, 23, and of course 2020, actually more or less in line with what we saw back in 2021. So right now up by 14.76%. That's actually the smallest year-over-year gain going all the way back until the end of March of this year. In regards to the month supply, we're sitting at a 4.1 month supply. That has been increasing steadily ever since really July this year. 1 year ago at this time, the month supply was at 3.6 months. So at 4.1 months, this is at least a 3-year high during the same time frame. In regards to how fast or how slow houses are selling, on average, it took about 40 days to sell a house. 1 year ago this time, days in the market was approximately 32 days. So taking approximately 1 week longer to sell a house compared to 1 year ago, which is much different compared to the start of this year. January through April this year, houses on average were selling faster than 2023. But the divergence or the change occurred back in May this year, when homes on average were selling slower compared to last year. And last year, of course, is the orange line right here. By the way, a median number of days in the market at 40 days is at least a 3-year high during the same time frame. And that, of course, is all contributing to the rise of inventory levels, but the gains have been losing momentum ever since October this year, which, of course, causes downward pressure on inventory numbers as well. 2 more charts I want to share with you guys. The first one is the average sale price to final list price ratio. That was at 98.7%. This means out of all the houses that sold over the previous 1 month, they sold for 1.3 percentage points less than the seller's final asking price, which is right in line with what we saw back in 2022, but lower than last year and of course way lower than 2021. What I found to be really interesting is that the changes of this ratio haven't really changed a whole lot this year. We started the year at around 98.5, now we're at 98.7%. The peak was at 99.5. Much different compared to 2022 and 21. To start the year in 22, homes on average were selling just slightly above the seller's asking price. Then, during the craziness of the spring home buying season of 2022, homes on average sold 2.5 percentage points over the seller's asking price. And by the time we hit this time last year, or that time in 22, it decreased to 98.7%. So a decline of about 4 percentage points, whereas this year we saw a small decrease from 99.5 to 98.7, approximately a 1 percentage point decline. I mention this because back in 2022, for the year as a whole, compared to 2021, the US median sold price barely squeaked out a gain, up by 0.9%. So even though inventory doubled, mortgage rates doubled, and homes on average were selling much slower or much lower than historical norms in the second half of the year, home prices still increase. So I'm guessing we'll probably end the year this year up by around 3, maybe up by 4%. I'm guessing around 3% if rates stay at these elevated levels. Lastly, let's have a look at the share of reduced price listings. I don't know what happened with Redfin, because Redfin used to share the percent of price reductions, but it's actually gone on their weekly updates. So if you guys know what happened, let me know. But their numbers, according to Redfin, were always much lower compared to Realtor.com and Altos Research. So in any case, I'm looking at Altos Research, which is the week ended November 1st. We're at 39%. So approximately 4 of every 10 houses for sale nationwide for existing houses have reduced their asking price. This is in line with what we saw last year this time at 39%, but lower than 2022 at 43%. But at 39% right now, of course, this is much higher compared to 21, 2020, but also higher than pre-COVID. Back in mid-November 2019, that share was at 36%. Another signal that home price growth is fairly strong right now is that we're not seeing a sharp increase of price reductions, right? So ever since really August, the share price drops has been paid at around 39%. Much of it compared to 23, when the share price drops were increasing through mid-November. And also same goes for 2022, when the share increased to increased from 17% to 43% by the time we hit early November. Whereas this year, the share price drops relatively stagnant at around 39% for the past several months. With that said, please comment below with your biggest takeaways from today's video. Please also like and subscribe, and of course, share any of my videos on your social media. I appreciate that very much. It's all about growing the channel and providing more value to people, and sharing, in my opinion, unbiased reporting regarding the U.S. housing market. So if you guys appreciate that. With that said, I appreciate you. Have an amazing day, and we'll see you in the next video.